Hey everyone, welcome back to the channel. I got a super exciting video for you today where I'm finally going to reveal my entire stock portfolio. And I know this has been requested for months on my channel, so here it is. I finally got around to making this video. So what I'm going to do in this video, first I'm going to give a quick rundown of every stock I own, how much of it I own, if I'm up or down on the position, and my reason for holding that stock. Then we're going to take a look at my portfolio as a whole, and then take a look at what percentage of my entire portfolio is in each stock. So I hope you enjoy this video. Let's get right into it. All right, so here is the portfolio, and as you can see, I have 7 positions. So we're going to run through them from the largest position in my portfolio all the way down to the smallest. All right, so let's get started with the largest position in my portfolio. It's not a stock at all, it is cash. I'm currently holding a ton of cash in my portfolio. In the past, I've said it's around 50%, and right now, since a lot of my holdings have gone up since I've made those videos, my cash position in terms of my entire portfolio is now around 40%. And I'm not doing this because I'm predicting a stock market crash next week or next month. I'm really just doing this because I don't see many opportunities in the market to deploy that cash to generate a good return. Right now, pretty much every stock I see has just been going straight up for the past 5 or 6 months. And because of that, I don't really see many opportunities to make a low risk investment and generating a good return. Now, on the other hand, while I'm not predicting a stock market crash to come next week, I also wouldn't be surprised if one happens. The stock market is at all-time high valuations, and if history tells us anything, it's that these types of valuations are not sustainable. So right now I'm simply being very patient. I'm keeping my eyes open to see if there's any other opportunities out there in the stock market. And I recently made a video on my watch list, which was 5 stocks that I am watching, where if any of those 5 stocks take a dive, I will gladly put my money into those companies because I talked about why they're great companies trading at discounted price. So I'll put a card up to that video if you want to check it out right now. And now let's get to my actual stock position. So position number 1 is Bank OZK, ticker OZK. And as I've said in plenty of my previous videos, Bank OZK is my largest position. Now there's a couple reasons for this. First is because Bank OZK is one of the highest quality companies you are going to find anywhere. They're a bank, and I think they are one of the best run banks, if not the best run bank in the entire United States. If you just take a look at some of the accomplishments of this bank, they have a higher efficiency ratio than pretty much any other bank out there. They also have a lower charge-off ratio, so their loans are defaulting at a lower rate, and they are able to earn consistently higher return on equity and return on assets compared to their competitors. And I think the reason for that is the management team. The management team is one of the best I've seen in the stock market. The CEO of this bank's been at it for over 40 years, and since that time we've seen very consistent growth with earnings in this bank and dividends. This stock has been growing dividends for something like 20 straight years, and right now they're currently paying like a 4% dividend, and it doesn't look like it's going to be cut. So if you take a look, my average cost is $25.50, but the price right now is only $22. So right now I'm down around 13% on this stock. I'm not surprised at all on this because the stock mainly writes loans in the commercial real estate space, and as everyone knows, that is the biggest part of real estate that's taken a massive hit during the pandemic and this type of economy, where right now the demand for commercial real estate is near an all-time low. And because of that, it's no surprise that this stock has been going down, along with the entire financial sector that's really been crushed this year. But for me, this is a 5-year plus investment. I'm holding this for the long term. I know there's going to be pain in the next 1 or 2 years as interest rates stay low and the potential for a lot of defaults in the real estate space. But if there's any bank I trust out there, it is this one, with the management team, with the history it has. So that's why this bank is my largest position. Another reason I'm holding it is because I'm someone that thinks interest rates are going to go back to normal levels, are going to normalize over the next 5 years or so. And if that happens, banks and the whole financial sector really will get a big boost. And so for my price targets on the stock, right now I think the stock's worth around $50. And that's right now with interest rates at 0 and real estate where it is. But over the next few years, if we see real estate start to recover, and if we see interest rates just go up by a few percentage points, there is some massive upside for this bank. And if we do see interest rates go where I think they're going to go, this could be an $80 stock in around 5 years' time. All right, so now let's get to the second stock in my portfolio. It is Cumulus Media CMLS, and this is my hidden gem of an investment. Where when I bought this stock back in April, it fell from $18 a share down to around $3.50. And if you take a look at my average cost, is $3.47, and right now the stock is trading at $5.40. So I'm already up 55% on this stock. And the crazy thing is, this company is still very undervalued. Personally, I'd have no problem starting an investment in this company at $5.40. So that's how undervalued I think this company is. Now, the reason they fell this much, obviously, is because they're a radio company with a ton of debt, and a bunch of investors, including institutions, look at those two factors and say, no, I don't want to own this anymore. which is why it had the huge sell-off at the beginning of this year. But we're seeing the recovery for the stock go very well, where the debt paydown is on track where management wants it to be. The management of this company is basically going all out on paying down debt. That's the only thing they're trying to do over the next few years. They have no debt maturity until 2026, so I think that gives them plenty of time. And the company just announced during their last earnings call that they sold off their tower portfolio for over $200 million, and they're using that to pay down debt as well. So I think we're just about in the clear in terms of debt in this company, and once that's not a problem, once the debt is paid down on this company and they're successfully deleveraged, I think the price is going to absolutely go through the roof. Where I originally said my price target in 3 years time is $15 to $18, and then looking forward from that, I think this company could be a $20 plus stock in the next 5 years, where they have a lot of things going for them. They have their podcast business, they have the rights to the NFL and March Madness. So these are huge assets that's going to help the company out and really gives them that competitive advantage that I like to look for. All right, going on to stock number 3, the third largest position in my portfolio. This is Sprott Inc. And this is the gold stock I decided to add to my portfolio. I think right now with all the money printing that's going on, now's as good of a time as ever to own gold in your portfolio. And I chose to get exposure to gold through Sprott Inc. So for anyone that doesn't know what Sprott is, they're not a typical gold mining company. Instead, they're an asset management company that really operates in the natural resources space. And their biggest product is their precious metals ETFs. So they have gold ETFs, silver ETFs, platinum ETFs, and a bunch of others that track precious metals. And in my analysis on the stock, I talk about why I like them better than some of the other names out there. This company has a real competitive advantage with the fact that those ETFs, you can actually redeem the shares for physical metals, which is not something you can do with the GLD ETF or a lot of other so-called gold ETFs out there. And so I really like this stock because there's two ways to win with this company. The first one is if the price of gold goes up, obviously, this company owns a ton of gold. So if the price of gold goes up, this company is leveraged to that and will go up even more than the price of gold. But the second way that this company can do well is just if more people decide they want to own gold. And I see this as huge potential because right now, if you look across the investing world, you can look at pension funds, you can look at retail investors and everyone in between, there is not enough gold being allocated to portfolios. Where right now, pensions are really holding no gold at all. Same with retail investors. The allocation of gold to portfolios is at a record low, and all we have to do is see this recover just to the normal average, and this stock will benefit greatly from that. Now, personally, I think both of these things are going to happen. I think we're going to see gold go up even more. Gold has been on a roll this year, but I think we're going to see gold go up even more. And in addition to that, I think investors are going to see the price of gold doing so well, and maybe we'll see other things like inflation start to creep in, which will cause some concern for institutions and pensions, and we'll see them pile into gold as well. So I think there is a massive amount of upside for this company. Now, in terms of the price, my average price was around $39. Right now, the stock's at $34, so I'm down around 14%. And when I first talked about the stock, I said I bought it in small at first because it was pretty high, and we did see a huge run up in the stock when I bought it. So I said I'm going to start a small position and average down if we see the stock fall a significant amount, and we did, so I am planning on buying more of the stock very soon. In terms of a price target, if we see gold stay near the prices where it is right now, near around that 1900, that previous all-time high we made back in 2011, I think this stock could easily go to $60 per share, just based on the assets under management of this company and the earnings that will bring them. But like I said, if we see gold prices start to go up more, this company will absolutely take off. All right, on to stock number 4. This is Altisource Portfolio Solutions. Their ticker is ASPS, and this is the 4th largest position in my portfolio, coming in at 10%. And I've talked a lot about the stock. This is my spec play for a housing crash, right? In the event that the stock market crashes, similar to what we saw in 2008, this stock is going to do very well. I am up a good amount on this stock. My average price is $9.54, so right now I'm up over 40% on the stock, and I'm not selling anytime soon. I'm not selling because we really haven't seen the potential for what the housing market looks like. Right now, there's no foreclosures going on, no evictions going on, because the government's basically put a ban on all of that. But at the beginning of next year, Q1 to Q2 next year, those are going to begin to fade away. And that's the point where we're really going to see the potential of this company. And so I've said this before, if we do see foreclosures tick up just by a few percentage points, I think this stock is a 10x, or we could see this company go to $100 per share or more. I also like this stock because I have it as a hedge against my largest position, Bank OZK, that operates mostly in real estate. So in the event that real estate does absolutely fall off a cliff, my Bank OZK position will suffer. However, the gains in Altisource should offset any losses I have there. So all right, so those are my 4 major positions. These last 3 positions are more of my speculative plays where I try to make them a smaller amount of my portfolio. So these last 3 stocks total make up less than 5% of my entire portfolio. And going on to stock number 5, it is Contura Energy CTRA. And this is a recent position I took, a speculative play on a coal miner. And so far it's actually worked out very well. My original thesis for this stock was that coal had bottomed out. Way too much pessimism in the coal industry, even though there is being less and less coal being used. I think the demand for coal, especially in places like China, do support higher coal prices. And since that video, coal prices have been on a roll, and so has this stock. This stock, my average cost is $4.22. Right now we're up over 91%. So the stock has almost doubled for me already. And again, I'm not selling this one anytime soon because I think coal prices still have potential to go higher. And in that case, this stock will rocket up even more than it already has. Like I said in my original video, if coal gets to, the levels they were at in 2018, 2017, this stock would be a 20x from my original price at around $4. That would put it at around $60 to $70 per share. Of course, there's no guarantee that's going to happen. That's all predicated on both the price of coal going up back to where it was and this company executing well. But that's why this is a spec play. I'm holding on to it in the event that we do actually see those high gains. All right, and the second one of my spec plays is Immunomedics, IMMU. And this is my newest position. I added them just a couple of weeks ago. I bought this play as a buyout arbitrage play. So this company is being bought out by Gilead Sciences. And even though I think the buyout is very likely to go through for many factors, the price of the stock actually didn't jump up to the buyout price. So I bought some shares, a very small amount, but right now we're up almost 1% on my position. Obviously, this isn't a stock that's gonna go up 10 times. There's a cap on the limit on this stock, basically what the buyout price is. But the buyout price is $88, and I think we're going to get there by the end of this month. The stock tender has already started, so once 50% of the shares are tendered, we should see the buyout go through for $88 per share. All right, and my last position in my portfolio, not even really a position anymore, is Acorn Stock, AKRXQ. Unfortunately, this one did not turn out as well as I wanted it to. The company was in court going through working things out with its lenders, and unfortunately there were no bidders for the company. Instead, the company had to sell itself to the lenders. So as of this point, it's very unlikely that the shares will be worth anything. So in this case, I'm writing this stock off as a loss. So that's okay. You win some, you lose some, and that's why position sizing is so important. This was an incredibly tiny part of my portfolio, so I really didn't care at all in the likely event that the shares were going to go to zero. All right, so like I said, the stocks I just showed you, the percentages weren't exact, but they were a pretty good representation. So here what I did is I calculated the exact position sizing of each of my stocks along with the cash. So like I said, I'm holding a lot of cash right now. It's estimated around 40% of my portfolio. It's not an exact calculation, but that is around the level that I'm holding. So here is, the percentage of my portfolio, 40% cash, and then the OZK position is my largest at around 23%. Then we have Cumulus Media coming in at 15%, Sprott at 9.5%, Altisource at almost 8%, Contura now makes up 4% after it's almost doubled since I bought it. And then we have those two smaller positions, IMMU and Acorn, which is going to zero. So I hope this gives you a better picture of the exact percentages of these stocks that I'm holding. And here is another chart where I did it without the cash. So if you don't want to count the cash, just the stocks that I'm holding, here are the percentages where OZK jumps up to 30%, Cumulus 20, Sprott 13, Altisource 10, Contura 5, and then the two smaller positions. So those are the real percentages for my portfolio. All right, and now we're going to take a look at how my portfolio has actually performed. And I know a lot of people are going to ask this question. This isn't really something I look at, especially over a short time period. If you're just looking at the year-to-date performance, I honestly don't care what my year-to-date performance is, against the stock market, because I'm in this for the long term. I'm in this for 10, 20 years out. So half a year of underperformance isn't really going to mean much to me. I downloaded this return spreadsheet from Boggleheads, so I'll leave a link down to this if you want to track your own portfolio. And so this is what the calculator comes up with, where I've been tracking this since the middle of 2019. And we can take a look. My year-to-date performance is around 10.3%. And like I said, my stock portfolio isn't holding all the cash. I have cash outside of that portfolio where I can actually get more than 0.03% on it. So my year-to-date performance is 10.3%. If you want to account for the cash that technically I count as part of my portfolio, this is going to be lower. Call it 6%, right? Since my portfolio is around 40% cash, call it 6% year-to-date when you're factoring in that cash. And so now we can take a look at how the stock market has performed and see how I compare. All right, so here we are on the S&P 500, and we can look at the year-to-date performance. And if we take a look, it is at just around 6.73%. So there we go. We saw my portfolio year to date was 6% and the S&P 500 is 6.73%. So you could say I am slightly underperforming the market, but the thing is I'm holding 40% cash. So me almost keeping pace with the stock market while I am in almost half of my portfolio in cash, that's a win for me. I am absolutely fine with that result. Obviously, with such a large percentage of my portfolio in cash, the more the market goes up, the more I'm going to be underperforming, and conversely, the more the market falls, the more I'll be outperforming, since that cash won't be going down in value. Again, this isn't really something I care about. It's not really something I check up on. This is the first time I've checked my performance this year just for this video, but I know a lot of you are going to ask how my portfolio has been doing, so that's the answer: underperforming the market by under 1%, while a large percentage of my portfolio is in cash. So that's it for this video. Sorry it took so long to get it out, and I hope you got some value from this. So if you did, I'd be very grateful if you return the favor and hit the like button on this video to help YouTube push it out to more viewers. And if this is your first time watching one of my videos, subscribe right now and hit the bell icon so you get notified whenever I upload videos like this. So that's it for this video, and I'll see you on the next one.